Hello and welcome. You're watching Market Today. I'm Sakshi Batra and this is Business Today TV. And this is where we talk all about the latest trends in the stock markets. Also focus on a few stocks that are buzzing in trade to help me with the view on the markets, the way investors should approach the markets right now, and the strategies for those buzzing stocks. I'm joined by Mr. Kranthi Bathini right now from Wealth Mill Securities. He's the Director of Equity Research right there. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, great day for markets. In fact, 3 days in a row, we have been seeing that the markets are on an uptrend. Now, 17,500 does not look very far away. We're up by 1% in markets right here. Looks like the festive cheer is spreading far and wide. Your thoughts on the markets and what can we really look forward to as we approach Diwali?
Absolutely, Sakshi. What we are witnessing in the market is a pre-Diwali rally right now, which is a good news for the investors because last week has been a turbulent week for the market. Investors and traders were despondent with respect to the movements in the market. But this week started with a good news supported by the global cues. Especially, we need to think the support that's coming from the global cues is extremely important. Of course, India has been outperforming in the global equities as well as emerging market space. But we should not ignore the global cues because of the support what we are receiving from the global cues is really helping the market. And we need to see how the stance of the foreign portfolio investors going to be because still as on date, foreign portfolio investors tend to be the net sellers. If they become the buyers over a period of time, that gives the real kickstart for the markets. But one thing we also keep in mind is the earnings season is very smooth. We are receiving a positive earnings season. Whatever be the companies that are posting the results are good. Till now, there are no disappointments. So put together to sum up, that is fueling the pre-Diwali rally in the markets.
Absolutely. Pre-Diwali rally is what we are witnessing on the markets, but far and few between stocks are really in focus in trade today. Let me talk about one stock like that, and that's Zee Entertainment. The stock is up about 5-6% in trade, and that's after this block deal that has happened. In fact, we have seen that the stock Invesco Developing Markets Fund, which had a 10.12% stake in Zee Entertainment, was looking to sell half of its stake in the company in a block deal. And that's what has really happened. In fact, there is a change of hands of about 5.3 crore shares of the company. And post this, we've seen the stock really rallying in trade. First up, Mr. Bathini, help all our viewers really understand what is really happening here when the block deal happens, changes of equity happens, and, how does it really benefit the shareholders of Zee Entertainment?
Actually, Invesco, which was a minority shareholder in Zee Entertainment, and from past 10 months, there was a, you can say, corporate battle that was emerged in the Zee Entertainment. Right now, with the merger of Sony and Zee Entertainment, Invesco decided to exit from Zee Entertainment. It gives a smoother process and also going ahead as Zee as well as Sony, they are joining hands and becoming a single entity. That gives a greater clarity with respect to the investors and also Invesco exiting at this point of time. It gives more clearance as well as for the existing management like Puneet, who is a minority promoter, but is a promoter who holds the family around holds less than 4%. But Puneet going to continue as a existing CEO of the entity. It gives good synergies for G going ahead. So Invesco, who is objecting the uh, the initiatives of the existing management, is exiting right now. So it gives a smoother transition going ahead. So that made the stock to be in the positive territory with the exit of Invesco right now.
Okay. We've also seen the stock has really outperformed the market also in the past 3 months. The stock has surged 20% as against what we've seen the benchmark indices rising about 5% odd, So in fact, in June, we have seen that the stock had actually touched a 52-week low of 200 rupees. But right now, it's actually up sharply. So, will this rally continue? on Zee Entertainment, and what does this mean for new investors also? Does it mean an opportunity to enter into the stock right now?
Sakshi, we need to look into two things first. One thing is G as well as the Sony merger gives a big booster for G Entertainment as a whole, and it will definitely benefit the investors of G Entertainment. And also, right now, they got all the clearances from the CCI and as well as also NCLT. Right now, the merger process will be very smooth, which gives a greater hand for the G Entertainment. And over a period of time, because of the synergies of Sony that are adding to G, definitely it gives a formidable visibility of earnings for the G, which is going to be positive for the G investors as a whole. So investors with a high risk appetite, and also because entertainment industry is, the dynamics are changing right now. The OTT platforms are emerging, and most of the people, they're spending most of the times in front of YouTube, and the smartphone and as well as the smart TV culture has been emerging. So people are sitting in front of the TV, but they're not watching the news channels, but they're watching the YouTube channels right now. So there is a different dynamics, and the industry, entertainment industry, as well as the news content industry is completely changing its dynamics right now. So to sum up all these dynamics into consideration, the current Z Sony merger, which gives an upper hand for Z investors to overcome all these issues which have been lingering with respect to the G as a standalone company right now. So I advocate investors who have a high risk appetite. Definitely, India is a space where with 1.3 billion population, and entertainment is always have its space.
Yes.
So G is a perfect match to participate in this emerging story.
Okay, and what kind of targets can one really look to achieve if one invests for a long-term perspective?
With a 1 year horizon, definitely G can give from here onwards from 20 to 30% on a conservative basis. Investors can trade also, because of the, if the momentum continues in the medium term also, it can be a trading stock bet for the traders.
Okay, so both for a short-term trading perspective and for long-term, this stock can definitely be an opportunity for investors to get into. The high-risk appetite investors can look to achieve 20 to 30% upside on the stock over a long-term period. That means over a 1 year period as well. Well, thank you so much, Mr. Bathini, for sharing these insights on markets and on Z block deal as well for all our viewers to get a clarity on, what can we expect post this block deal on Z and the territory in which the stock will be trading at going forward from here. Thanks a lot.
Thank you, Sakshi.